Alright, for exercise 12-1, we're looking at reconciling Schedule 1, and we were given four components to consider if there's any impact to accounting for net income for tax purposes. First situation talks about a capital asset that was sold for $48,300, had a cost of $120,700, and a net book value of $53,900. It's the last asset in its CCA class, and the UCC balance in this class is $34,600 before the disposition. No other additions or dispositions in the year. On the accounting side, it was sold for $48,300 less the net book value of $53,900 for a loss of $5,600. For accounting for net income for tax purposes, we need to add back the $5,600. The tax side, we had the UCC of $34,600 less the lower of cost or the proceeds, cost being $120,000 and change, proceeds being just over $48,000. Take away the $48,000, we have a negative number of $13,700. which is considered a recapture for net income for tax purposes. So therefore we will add back $13,700. Total adjustments for accounting for net income for tax purposes will be add the $5,600 plus the $13,790 for a total adjustment of $19,300. Second situation, we have during the year the company acquired goodwill at a cost of $180,000. No expenses made during the year. For accounting for income tax purposes, any portion of the goodwill does not need to be expensed unless a write-down is required. For tax purposes, it's the depreciable property in Class 14.1, which has a CCA rate of 5%, and it's available for the accelerated investment incentive being 1.5 times. In this situation, we would have a total of $13,500 available for deduction for tax purposes. Third situation is that the organization had $15,000 of charitable donations. For tax purposes, we're not allowed to deduct charitable donations. So, in order to reconcile the two, we need to add back the $15,000 in charitable donations expense. Lastly, we have premium amortization on our bonds for accounting purposes of $4,500, and it increases accounting net income by $4,500. It's not available for inclusion for tax purposes, and for that we need to reverse the $4,500 of premium amortization, so it'll be a reduction for net income for tax purposes.